Hi guys, a very good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those were all of the top headlines that we're looking at as we kickstart this fresh trading week. And there is a lot that's, that we have to track in terms of cues this week as well. But first up, let's take a look at what's going on across the global markets. For Asia, it's a largely positive start with Hang Seng really leading the gains this morning. So it's a 2.6% gain that you have on the Hong Kong markets, 480 points in the green. Taiwan also doing quite well, and you have seen quite a move come through in the past couple of minutes as well. So the Taiwanese market's around 0.6% higher. For the rest of them, no big moves, but most of them are managing to trade in the green right now. So you have Straits, you have Shanghai, all seeing minor gains right now. Shanghai has actually seen quite a pickup in the past 10 minutes or so. It's moved 0.8% higher, so that one looking quite good. Straits is just around 0.25% higher. The SGX Nifty is also going to come up for you. It's there on your screen, around 42 points in the green, and this one also has seen quite a move higher in the past couple of minutes. So that's what's going on across the Asian markets. But let's also talk about Wall Street now. So the US ended a choppy trading session mixed on Friday. So the Dow Jones was up around 34 points. The S&P 500 was absolutely flat at the close, and the Nasdaq Composite saw a 20-point cut at the end of the trading session. So all three indices saw weekly gains, however, with the Nasdaq Composite posting the largest increase at a little over 2% for the week. The S&P 500 added over 1%, and the Dow was quite flat, just around 0.2% in the green. So that's what happened in terms of trading action for the week from Wall Street. But the big cue that we got was the non-farm payrolls data, which rose by over 263,000. This is for the month of November, and this is actually sharply higher than the estimates we had of 2 lakhs. So 63,000 higher than the estimates. The unemployment rate, meanwhile, came in at 3.7%, which is completely in line with expectations. The average hourly earnings jumped 0.6% for the month, which is almost double that of estimates. So CNBC's Steve Leisman is here with a roundup of all of the data and what we could really expect from the Fed going forward.
Payrolls and wages. This stronger than expected November jobs report really dashing market hopes for an early end to Fed rate hikes, but also raising fears of more rate hikes to come for longer. Krishna Guha from Evercore ISI writing right after the report saying it will reinforce the Fed's assessment that the labor market remains very overheated and rates will need to go higher for longer in order to bring it back in a balance. Here's the numbers he's talking about. 263 coming in for November payrolls. 200 was the expectation. We did get a downward revision in September, October, but not really all that meaningful. And there's the number Faber was talking about, 0.6, double the expectation, not going the right way, 5.1 year over year. Unemployment rate unchanged at 3.7, and not getting help for people coming into the workforce. The labor force participation rate ticking down to 62.1. That is a 10th lower than October. Let's take a look at where the jobs were. What you do see is this two forces in the economy. One is the cyclical slowdown from Fed rate hikes, not showing up very much, but still getting the pandemic or the post-pandemic hiring with leisure and hospitality, education, health services coming in very, very strong at the moment. Goods producing, I don't get that. It was supposed to be down, but it was up 37,000. Local government education also, we're hiring teachers again. Only retail trade down 30,000, but that might be a seasonal adjustment issue. Question about whether the job report is not picking up some of the layoffs and other weaknesses we've seen from companies. Tech was still strong, as was manufacturing. Remember, ADP reported a decline of 100,000 jobs in manufacturing. But markets, they got to take the data as it comes in. Here's what they're doing now to the Fed funds. Peak rate outlook was 483 before the report, 496 now. It was north of 5 before Powell spoke. So we haven't given all of that back, but a good part of it has come back. The market has reacted to this number, not so much by dialing in the possibility of a 75 hike in December. That's still pretty much 50. Some have mentioned the idea of 75. More, it's increased the probability of another 50 coming in February. The thinking has to be that this economy is not slowing. The Fed will need to lean harder on it to create the slack. The Fed needs to bring it down.
All right, Steve, thanks a lot for getting us all of those details as far as the November jobs report goes. So definitely stronger than expected. And the big fear now is that this could sort of give the Fed permission to keep hiking and that the market will be able to take it. But with that, let's bring you some important opinion. This comes in from Wharton School's Jeremy Siegel as well as Nuveen Saira Malik on how they are looking at this jobs print.
I did not regard today's jobs report as hot. I mean, first of all, the household data was negative, minus 150,000. And something else that was just mentioned in the last segment, but it's very important. People ignore the hours worked. and that fell. And even though it only fell 1/10 of an hour, that's equivalent of over a 200,000 loss of payroll individuals. I mean, what is the input into the economy is not just the number of people, but how many hours they work. So I didn't regard this as, I mean, it wasn't a terrible report, but I didn't regard this as anything on the labor front as being a strong report.
This is a hot number. It gives the Fed permission to keep increasing interest rates and also elongates that pause and moves out a pivot. And the question for us next year is, what does this mean for the consumer and earnings and the chances of a recession? The longer Fed raises rates and keeps them high, the greater chances of a recession. That resilient consumer could start to fall apart. They're already dipping into their savings rates to spend. And then earnings, which are not realistic for 2023, also probably need to come down. So we're not surprised to see equities trading down on this. I think that, from here, it's going to be in a trading range for equities and likely more downside given where we are and the optimism that we've seen on peak inflation.
All right, that is some important opinion coming in on the November jobs report. But with that, let's also bring you the final update of our global market wrap this morning. For Europe, we saw quite a mixed close on Friday. So the French CAC index was down around 11 points. The German DAX index saw a gain of around 40 points. And the FTSE, like you can see on your screen, was absolutely flat, just around 2 points in the red. The German exports actually fell 0.6% month on month in October. So this is versus the figure that we saw in September, twice as much as what analysts were expecting. However, the country's trade surplus increased as imports were down 3.7%, which is greater than the forecast of a 0.4% decline. So that is some important data to track as well from Germany. But that's everything that we're tracking globally. Let's talk about everything you should watch as we get into a fresh trading session. So we have Nigel, Vivek and Vahishta joining us now with the trade setup. Guys, a very good morning to all of you. And let's kickstart by talking about all of the cues that we should track today. Vivek, Friday was finally a down day after 8 straight good sessions. How's it looking this morning?
Well, good morning. Absolutely right. Friday actually saw some profit booking by the bulls after, as you mentioned, 8 straight sessions up. Now, coming by, what exactly to look for in this particular week, a lot of important data points would remain in focus. Going by, how the global handover has been, very mixed cues. You saw the data coming in from the US as well. So, Dow Jones as well as, the other US indices, and largely flat. So, giving mixed cues from there. Even European markets largely along similar lines, very mixed in terms of, the kind of handover they've given. Gold prices, have cooled off slightly from the 4-month high that they were trading at, and after the news coming in from OPEC Plus saying that they continue to maintain the same production, again you've seen quite a bit of volatility and quite a bit of an uptick in today's trading session as far as crude oil prices are concerned. Now coming closer home, some important data points to keep an eye out for. Number one would be the RBI policy, of 5 to 7 December. So what is the trajectory of the rate hikes, and the commentary there would be very important to track. Coming to the primary market, some strong subscription data from Unipar's IPO, almost over 25 times oversubscribed. And today, you have the S&P Global PMI services data as well. So keep an eye out for that as well. It'll be interesting to see whether Indian markets, especially broader markets, continue to outperform the benchmark indices in today's trading session.
All right, let's see how that pans out. For now, it looks like the start will be mildly higher at least. So let's see how we move from there. Let's also talk about the individual stocks that could be in focus in today's trading session. And we have Vahishta to fill us in on an entire weekend's worth. Vahishta.
Hi, Pavitra. Good morning. Let me start off with SBI, which raises 10,000 crores via its maiden infrastructure bond issuance. Moving on to some of the cement stocks, which are expected to be in news today. First is Ultratech Cement, which has commissioned a grinding unit in Maharashtra and in Madhya Pradesh. And with this, the total cement capacity in India for the company now stands at approximately 120 million tons per annum. JK Cement has also commenced a clinker production on the 3rd of December with an installed capacity of 2.64 million tons per annum. Moving on to Adani Ports, which has their monthly update out for the month of November. The company has handled 25 million metric tons of total cargo, which means a year-on-year growth of 6% in container volumes and 2% in dry bulk cargo. For the initial 8 months of the ongoing financial year, the cumulative cargo volumes grew 9% on year-on-year basis. So some positive news there. Next is Dilip Buildcon, which has executed a contract agreement with the Gujarat Metro Rail Corporation on the 2nd of December, which includes a project cost of 702 crores. And the last stock on my radar is SVJN, which has backed a 200 megawatt solar power project. Back to you.
All right, Vahishta, thanks a lot for that entire list of stocks. Let's also get you now the cues that we're tracking from the futures and options space. And Nigel is here with all of that. Nigel.
Well, morning. On Friday's trading session, you had the Nifty that ended down by close to around 100 points odd. But you look at the three indices that come up for you on the screen, and I'll say that it was the best trading session of the week. And that's because the breadth of the market looked pretty good. Now, by the end of it, you were saying, what's happening in the F&O market? Well, the Nifty futures as well as, the Bank Nifty futures, the open interest out there did see some shedding. So you think there was some unwinding of long positions. And that's precisely what the case was. If you're looking at the long positioning, well, from the FI's table, that was down by close to around 28,000 contracts. They added some shorts as well. So they continue to remain net long on the index. However, the long positioning has come down from around that 75% to around 66% odd. You like some shorts in the system. In case those flows dry up, then, the short covering could take place from a bullish perspective, which takes us higher. Now, on the index option side, well, they bought more than 1 lakh contracts and they bought more calls than puts. However, what's telling you that at higher levels we'll like to see some bit of a resistance is the way they aggressively are writing calls. Even in Friday's trading session, they wrote 1.7 lakh shares on the call side, and that's in the ratio of most 10:1. So at higher levels, you're expecting to see some bit of supply. Which are the active strikes? Well, 3 strikes were very active. 18,700 call, 18,800 call, and on the downside, the 18,700 put as well. So you're assuming, going by the premium out there, well, there is more writing that's taking place at that particular, at those strikes. On the Nifty Bank as well, normally it's not very, very active. But in Friday's session, there was 1 strike, the 43,000 contract. Well, that was very, very active. You had close to 23 lakh shares that were getting added out there. Some signs of writing out there. The 43,500 mark has been a bit of a hurdle for the Nifty Bank. So let's see whether it gets past that. On the Nifty, last week's high, that becomes a bit of a resistance zone. While support comes in at around 18,600 because we've seen writing at around that 18,700 odd mark. SGX Nifty suggesting we start in the green, buy the dips is likely to continue. Back to you.
All right, Nigel, Vivek, Vahishta, thanks a lot for joining us and taking us through the complete trade setup this morning. With that, we're going to get into our first short break in the show, but when we come back, we're going to track all of the updates. Hey guys, welcome back. You're still tuned into Power Breakfast, and let's now bring all of the updates from the G20 Sherpa meeting that took place in Udaipur yesterday. So green development, technological transformation, as well as women-led development were among the key themes at this meeting. So Parikshit is standing by now to bring us a wrap of everything that was discussed. Parikshit.
India has laid out 5 key priorities for the G20 Sherpas meeting here in Udaipur. This includes technological transformation, green development and lifestyle for environment, accelerated, inclusive and resilient economic growth, multilateralism, food, fuel and fertilizers, women-led development, tourism and culture. There will also be a number of informal meetings. For example, a Chai Pe Charcha is being organized for all the Sherpas to exchange views freely on the global economic situation. Amitabh Kant, the G20 Sherpa, will for the first time make a presentation on each of the 12 working groups and priority areas to all the Sherpas. And we will also be seeking views of the other countries in this forum here in Udaipur. There is also a plan to showcase the cultural side of the city. And this will really happen with all the 200 meetings that take place across 55 cities in India over the next 8 or 9 months.
Parikshit, thanks a lot for getting us all of the details that were discussed at this first meeting. In fact, from the sidelines of the meeting, Parikshit also caught up with Sanjeev Sanyal, who's member of the Prime Minister's Economic Advisory Council, and began by asking him about the key priorities for global economic growth, which are going to be placed before the G20. Listen in.
India's priority has got to be to maintain growth at a good level. We did go through a recovery from the COVID shock. But then again, as you know, the global economy is beginning to again lose momentum. Some of it is, of course, due to sucking out some of the stimulus that we had to provide during the COVID recovery. But there are many other sources of turbulence, whether it's energy prices or supply chains and so on. And I think the G20 has got to apply its mind to make sure that the global commons are kept in shape and kept open. And so I think this is an important part of the discussion over the next 1 year under the Indian presidency, basically maintaining global commons in a shape where economic growth can be sustainably sort of driven.
We believe that the strong capital allocation push would continue with Budget 2023. What are some of the priority areas the budget can focus on?
Well, I mean, the fact is that we have committed to capital spending as a way of maintaining growth. You can't suddenly switch that off. So that has to be maintained over time. But at the same time, let me say that now that we are out of the immediate crisis period, there has also got to be some mind space has to be applied on sustainability and macro stability. Even at the height of the economic crisis, you would have noticed that we remained, from a macroeconomic perspective, quite conservative. I think that conservatism stood us in good stead. So, we are generating something in the range of 7% GDP growth rate. Next year, we expect to be somewhere in the 6.5% to 7% growth rate again. It's still the world's fastest rate. That doesn't mean that our economic supply side cannot generate higher rates of growth. It can. I would posit that we can grow at as much as 9% if we really push ourselves. But that would mean that we would sacrifice macroeconomic stability. So I think the budget and the RBI's monetary policy as well, both of them should continue to take into account macroeconomic stability, because really this is about compounding, and we shouldn't lose track of that. Macroeconomic stability is absolutely key, and when the time comes where the global landscape is favorable, that is a time when we should push for the 9% level.
Right.
So for now, I think macroeconomic stability is absolutely critical.
All right, that is Sanjeev Sanyal. He expects 6.5 to 7% growth for the next financial year, that is for FY24, and he's also talking about some key expectations from the budget. With that, we are going to shift focus and now talk about the second phase of elections in Gujarat, where voting will be held in 93 assembly seats across 14 central and North Gujarat districts. Important constituencies today include Ahmedabad, Vadodara, Gandhinagar, as well as some other districts. And remember, Prime Minister Narendra Modi as well as Home Minister Amit Shah will also be casting their votes in Ahmedabad later today. So, of course, we'll keep bringing you updates on that front. But with that, it's time for another short break on the show. When we come back, we're tracking all of the cues from the commodity market. So stay tuned. Welcome back. You're still tuned into Power Breakfast. And as promised, let's talk about the commodity space now. Manisha Gupta joins us to fill us in with all of the action. Manisha, good morning and thanks for joining us. So crude has to be on top of your radar.
Well, yes, Pavitra, as always. And there is so much that has happened on Sunday and expected to happen today as well. So we're looking at the crude oil prices up by 5% in the previous week. OPEC yesterday has not made any changes to the production. So that means the 2 million barrels cut that we saw in the month of November will now continue into 2023 until OPEC changes its view in the month of January going forward. The other thing is that the G7 price cap on Russia comes in force today. The G7 has agreed to impose a price cap of $60 per barrel. That is done. But what the markets will watch is for any reaction from Russia. On Sunday, Russia also says that they will not accept the cap, but they will cut production, not provide to countries who are putting the cap here. So the markets will be reading out a lot into the statements that would come in from European Union, G7 and Russia today. So it promises to be another volatile day for the crude oil prices. But a good beginning yet again for the metals, as on Sunday as well, China did say that they are looking to dial back more COVID restrictions from major countries, and the demand scenario because of that has improved. Also because of the dollar index trading below 105, there's a lot of support coming in.
All right, Manisha, thanks a lot for getting us all of that update from the world of commodities. But with that, we're out of time on this edition of Power Breakfast. It's all good across Asia. Hang Seng is now up over 3%. So that market is looking very strong. The SGX Nifty also indicating a positive start, around 43 points higher on the SGX Nifty. Thanks a lot for tuning into Power Breakfast. Bazaar Morning Call is up next.